Hey everyone, welcome back to the channel. My name is John and this is your Modern Tech Breakdown. Today I'm taking a look at the details in the latest Microsoft earnings report, which may indicate we've reached the peak of AI. Let's jump into it. Here we have an article from the Wall Street Journal from Dan Gallagher that goes behind the headline numbers from Microsoft's latest earnings release. I picked out some of the most interesting parts. Let's dive in. Revenue growth in its cloud business slowed during the June quarter, with the intelligent cloud segment missing Wall Street's projections for the first time in nearly 2 years, according to FactSet data. Microsoft also spent an eye-popping $19 billion in cash capital expenditures and equipment purchased under finance leases during the quarter. That is equivalent to what the company used to spend in an entire year just 5 years ago. All right, so a few points. First, Microsoft's AI business seems to be rather spread across their product lines, and it's not all that easy to determine how much revenue AI is generating directly. They don't sell it as a standalone product. It's built into a lot of their existing products. However, it is easy to see how much they're spending to build AI. You can see from this reporting that capital expenditures, which includes the cost to build and train AI, is at $19 billion in the last quarter alone. That's a huge number, even for Microsoft. But let's scroll down and keep going a little bit. But Microsoft's total cloud revenue of $36.8 billion was about 2% short of analyst estimates, while revenue growth at its Azure public cloud unit came in at the low end of the company's own projection. Microsoft shares slipped 3% following the results in after-hours trading on Tuesday. So as I mentioned, Microsoft's AI offerings are sprinkled throughout their product line, so it's a bit concerning to see a drop in cloud revenue. You'd think it would be going up as customers clamor for these AI features. But this fact reminds me of a point that MKBHD made about a month ago. AI is a feature. It's not a product. We saw this with the AI devices like the Rabbit R1 and the Humane AI Pen. So it remains to be seen just how transformative all this AI investment is going to be. If we keep reading, we can really see the cognitive dissonance on display. The four tech giants are dumping record amounts of CapEx into AI, which hasn't grown into a significant enough revenue source to merit disclosure by any of them. Chief Executive Officer Satya Nadella said on Tuesday's call that Microsoft has the, quote, demand signal, unquote, to justify those investments and can always scale back plans to fill up data center infrastructure with servers. So here's some dissonance for you. Companies have yet to realize a revenue stream big enough to report on it separately, but yet the CEO of Microsoft sees a, quote, demand signal strong enough to warrant further investment. As time continues to pass, those two facts will need to come into alignment. At some point, AI is going to have to deliver revenue that justifies this very significant investment. I don't think we're near that point yet. I think Wall Street is going to continue to allow these companies to invest without punishing their stock price. But that day's coming. The AI is going to either have to create revenue or they're going to have to scale back this investment. I'm not sure which is going to happen, but it's going to need to happen at some point. But as always, thanks for watching. Please comment, like, and subscribe, and I will catch you next time.